So to transact this piece of real estate, $1.9 million of value has evaporated. $1.9 million of value on a $5.7 million deal has went to all the people involved and municipalities involved. So I want to talk today about the true costs associated with buying and selling real estate. Now, to sell a stock or any other asset, it's often one click of a button. And I am as guilty as anybody of panic selling stocks, making emotional decisions, buying and selling based on fear or however I might feel that day. Now, some people say this, what I'm about to tell you, is a negative of real estate, that it's illiquid. It takes 6 months and a lot of money to buy or sell real estate. I think that's a feature and not a bug because it forces me as an investor to have a long-term view. If my real estate could be sold with a click of a button, I think in March of 2020, when the world started to melt and the stock market dropped 10% 6 straight days, or whatever it was, I think I probably would have sold. I probably would have panicked. I probably would have taken a major discount to sell my assets. Lo and behold, the market roared back, and here we are at the hottest real estate market and the highest values of all time. So I think the fact that real estate is not liquid, the fact that I can't click a button on my phone, the fact that it takes time and money to sell an asset, I think that's a feature and not a bug. But I do want to talk to you about the costs associated with buying and selling real estate because it's serious. And a lot of people underestimate it. A lot of people think that if they buy a property for X and sell it for Y, maybe buy it for $1 million, sell it for 1.2, they're going to make a lot of money. And the truth is they're not. Let me tell you why. Because the teams and people and industries built around buying and selling real estate need to eat as well. So not only, I guess, talk about timeline first. The timeline of buying and selling real estate is often 6, 9, even 12 months to hire, vet a broker, to prepare the offering memorandum, to get your due diligence materials in order, all of your reports, all of your P&Ls, all of your tax returns, all of your property tax information, all the maintenance records. That stuff can take a while. Then you got to go to market. Then you got to solicit bids. Often that's a 45-day window. Then you go under contract. And I'll be honest with you, to close a self-storage facility in the state of New York, where I do a lot of business, takes 90 to 100 days. We've had closings take 9 months, the one in Gloversville. So what does that mean for us? That means that real estate is illiquid. Now, that's a good thing and a bad thing. A bad thing because if times get tough and real estate values go down, sponsors like me, people who do real estate deals and count on transactions happening, we can go hungry for a long time. And the way private equity is organized, the way private equity is set up, sponsors like me, and again, listen to episode 3 if you're confused, sponsors like me, we make a chunk of our money. That preferred return goes to investors, that promote, that back end split, the carry goes to us. So if we're not buying and selling, it's hard to make a lot of money. That's one of my major gripes with real estate private equity is that it encourages transactions. It encourages sales. It encourages sponsors who control the deals to sell assets, to lock in gains, to restock the coffers, to make money, do whatever it is. So a lot of people like me, a lot of real estate investors are nothing more than service business owners. They're doing the service of buying and selling real estate. They're flipping it. They never really make long-term passive cash flow. When they stop working, they stop getting paid. And that's a tough position to be in when you're counting on selling and buying assets to make money. Because guess what? If the market tanks, you could be sitting for 4 or 5 years living on cash flow that's non-existent because your firm doesn't make any money unless you sell. So all that to say, let's talk about some of the hidden, or if you're in the business, you know this stuff very well, but the costs associated with selling a piece of property. I have in front of me, and if you're watching this on YouTube, which are in the show notes of the podcast, my editor is going to put a picture on the screen for you right now. This is the costs associated with me buying an asset. I'm looking at a property right now. It makes $375,000 in net operating income. My acquisition offer is $5.75 million. So I'm going to spend $5.75 million on a piece of property. You might think, okay, all in, maybe you're in for $5.8 million, $5.9 million after closing costs. Well, think again. So if you go back to cap rates, $373,000 in net operating income and a $5.75 million purchase price, that's a 6.5% cap rate. That means the overall yield, the $5.75 million, is generating 6.5% yield in net operating income every year if the asset was unlevered. Now, what are the costs associated with me buying it? Well, I have something on my underwriting called a sources and uses document. And the sources and uses says, okay, where's the money coming from and where's the money going? The acquisition price, $5.75 million. Legal fees, my attorney to build out my PPM, my private placement memorandum, to close the real estate, that can range from $20,000 to $30,000. Let's say $20,000 because I've already got a PPM template. I don't have to pay that again. $20,000 to close the deal from my legal team. Title insurance, $28,750. Appraisal, $15,000. This is actually 3 properties, so we have three property appraisals here. Environmental report, these are called third parties. There's 3 of them that are on every deal for us. It's an appraisal, an environmental, and a property conditions report. Environmental and property conditions report, $5,000 each. Mortgage tax. Now, the state of New York, it's county specific, but Tompkins County, New York, for sure, has a 1% mortgage tax, meaning for a loan, if you take out $1 million loan, you have to pay a $10,000, 1% tax to the government to take out that loan. So on a loan, on a property where we're getting 65% loan to cost, $4.1 million loan, that's a $41,000 chunk of mortgage tax. Now, financing fees, these are things like commitment fees and other lender fees related with getting a loan on the property. That's about $20,000 on a deal this size. Transfer taxes and recording fees. Now, in many states, counties, everything else, there's a 1 or 2% transfer tax, meaning if you transfer a piece of property, the local municipalities get some fees associated with recording and transferring the property. $91,250 in some of our areas where we have 2% of the overall cost plus a $5,000 recording fee. Working capital. Now, this is another part where you can't just buy a piece of real estate and have $0 in the checking account and run it as a small business. You have to fund an initial checking account. So for a deal this size, a deal that's generating $373,000 in net operating income, that requires $75,000 of working capital. Now, we also have capital expenses, meaning maybe we need to repair some pavement. Maybe we need to put in new signs. Well, definitely we need to put in new signs. We need to brand the facility. We need to get security cameras installed. We need to put a gate on. We need to do any necessary maintenance. On a property this size, we budget $150,000. Then you got some fees associated with the deal. I have to bonus out my acquisitions guy who found the deal. I got to give him a certain amount of basis points as a bonus for finding the deal. Got to bonus out my acquisitions team, my CFO. They all get a bonus when we close a deal. And I also got to charge acquisition fees as a real estate private equity company. That can range on small deals from 1 to 3.5%. Some of our really small off-market deals, 3.5%. On some of our larger, this size deals, 2.5%. On a big deal, if we closed a $75, $100 million deal, it might only be 1%. But on this deal, it's going to be $153,000. That's paying me as the real estate private equity person for finding, sourcing, putting together, closing, doing all the work associated with this deal. And believe me, it's a lot of work. I have $400,000 in annual overhead right now on our acquisitions and closing team. So do all that math. We got $301,000 in soft costs. That's the legal, mortgage taxes, all those things. Then you got the acquisitions fees of $153,000. Then you got hard costs of $150,000, making this grand total purchase $604,000 in additional costs on top of the $5,750,000 deal, making the grand total a whopping 10.52% more expensive than the list price for me. $6.354 million to buy a $5.75 million property. Okay, there you have it. Now, what about the seller? What expenses does the seller incur when they sell a property? Now, a mom and pop seller, they might not have a disposition fee, a refi fee, all these deal-specific fees that the sponsor charges, but a seller, a mom and pop seller might definitely pay a broker. A broker to sell their deals 5%. On a $5.75 million deal, that's $287,000 to the broker that lists, markets, and closes the deal. They're also going to pay a transfer tax, generally 1%, $57,500. They're going to have legal fees, $25,000, a safe assumption on a deal this size, for total soft costs of $370,000. So you take away $370,000 from the 5.7, they got $5.38 million left. Now let's say they accelerated some depreciation. Maybe they did bonus depreciation and got 30% of the what they had in the deal reduced, and their basis is much smaller. They have a capital gains tax of $4.4 million, taxed at 25%. Which capital gains range from 15 to 25%. We're looking at having $4.4 million left when it's all said and done. So I paid $6.3 million, and in the seller's pocket, when it's all said and done, is $4.4 million. So to transact this piece of real estate, $1.9 million of value has evaporated. $1.9 million of value on a $5.7 million deal has went to all the people involved and municipalities involved and Uncle Sam to make a deal happen. That is insanity. So while maybe this purchase price reads as a 6.5% cap rate deal, the opportunity cost, if we think about this as the opportunity cost of the seller selling. The seller, remember, they only got $4.4 million on an asset that was generating them $373,000 in total operating income. So this property was generating $373,000 a year in income, and they just sold it, lost that income, and in return got $4.4 million. That's an 8.42% capital cost opportunity, meaning that $4.4 million that they got in their checking account, they traded that cash for $373,000 a year, or an 8.42% cap rate, final realized at the end of the day. Now, what did I pay? I paid 10% more than my list price because I got all these expenses on my side too. So the $6.3 million that I ended up paying all in to own this asset is a 5.88 cap, meaning that $373,000 in net operating income is 5.88% of the total all-in cost that I have. So this makes real estate really complicated for investors because me, as an owner, as a new buyer, I have to find a way to extract value. I have to raise rents. I have to cut costs. I have to find a way to make a deal work for me. Now, it's easier said than done, right? It's much easier said than done because here I am paying $6.3 million for property and the seller only sees $4.4 million of it. That's why the standard real estate private equity model of sponsors like me buying and selling and trading properties all the time, a lot of money evaporates. A lot of value evaporates into thin air. This episode is brought to you by Launch Kits. Visit launchkits.com/sweaty for $50 off a $750 website. So for $700, and they actually turn it around in 7 days as well. So for $700, you get an SEO, search engine optimized website. You get G Suite integration with email and Google My Business optimization, and you get a beautiful website. Visit boltstorage.com. That's my website. Justin and his team built it. They've built over 100 websites for folks who listen to this show. And guys, it's as good as it gets. If you need to get found online, visit launchkits.com/sweaty today. Thank you for listening to the Nick Huber Show. Just wanted to remind you that we have a paid real estate community where some really special stuff is happening. People are breaking down deals. People are networking. People are, I think, even formulating partnerships inside this group. We have over 100 members now. For more information, you can visit sweatystartup.com/REC. And the first 299 members of the group to get some momentum get $200 off the annual membership using the code FIRST299, FIRST 299. And also, you can check it out for 5 days for $1. You make a $1 payment, you can check out the community for 5 days. Highly recommend it if you're serious about bringing in some other people into your network, into your life to help you become a better real estate investor.